Hi, welcome to MonsterMortgage.ca video blog. Happy 2011. I believe this is our first video blog of 2011. We're here today just to discuss some of the new rules that Jim Flaherty introduced last week. This is the second set of rules he's introduced. I think the last one was April 2010, so it does affect a lot of Canadians, but we'll sort of talk about the three changes he made and see how that will affect you moving forward.
Yeah, a couple of things they changed. First thing being that refinances after March 18th are no longer going to be able to go past 85% loan to value, which means that you must have at least 15% equity in your home. So something to look forward to if somebody was thinking about possibly refinancing their home, maybe consolidating some debt. This would be the time to do it if you had to go beyond that point of 85% loan to value, certainly up until March 18th. The other thing that's how this is going to be affected is that amortization is going to change. And on insured deals, they will only allow you to have a 30-year amortization, previously at 35 years. Now this is applicable to all deals, all purchases after March 18th. You must have your deal into a lender and being reviewed by CMHC or Genworth prior to March 18th, but deal doesn't have to close before then.
And just to give you an example of what that means, on a $300,000 mortgage at a 35-year amortization versus a 30-year amortization, it's roughly $105 more. So it goes from roughly $1,400 down to $1,300. I think it's $1,405 to $1,300. So it does affect Canadians when it comes to qualifying. Again, this is only for high ratio mortgages, not conventional. But the amount that Canadians will qualify for will obviously be less because they're using a higher mortgage payment. And for cash flow purposes, even if you would qualify based on a 30-year amortization, you now will have to spend, in that example, about $105 more a month on a 30-year amortization.
If you are currently pre-approved, please make sure to check with whoever you're doing your business with that your pre-approval amount will still be covered post March 18th, because if somebody's qualified you at the 35-year AM, with the new 30-year AM, you might not qualify for as much as you thought you did. So that's something for sure to have a look out for. There was a third small thing that they changed.
Which was,
Care to explain that?
Yeah, it was basically home equity lines up to, for high ratio mortgages. So it was basically a line of credit up to 90% of the value of your home. But Steve, as you mentioned earlier,
nobody had that product.
No lenders even had that product, so it doesn't really affect most Canadians. So amortization, 35 down to 30 on high ratio mortgages. As Steve said, March 18th is the deadline. Doesn't have to close by then, but a deal has to be, application has to be into CMHC or Genworth, and the refinancing as well as that.
Great. Well, thanks for tuning in. Certainly, if you have further questions, want to discuss this more, contact us by email, call us at the office. We'd be more than happy to go over this further with you. Again, thanks for tuning in to MonsterMortgage.ca video blog, and thanks for coming, Christian.